Hey everyone, welcome back. A lot of you out there are probably wondering how to navigate these crazy financial waters we're in. Well, get this. We've dug into some research that suggests the answer might be hiding in plain sight.
That's right. We're talking about the power of antifragile assets.
Yeah.
Things that actually become stronger when things get shaky.
Yeah. It's like, think of it like a muscle. The more you challenge it, the stronger it gets. Or how about a forest? After a fire, new growth comes back even stronger. So today we're diving deep into the world of investing, specifically this classic debate, gold versus bonds.
Right.
This research we found actually suggests that gold, not bonds, could be the real haven in today's world. Kind of surprising twist, right?
It really flips the script on what a lot of people, at least in the West, have always considered the safe haven government bonds.
Exactly. It's like we've always been told bonds are the safe bet. But this report is making the case that it's not so simple anymore, especially with everything happening globally.
Yeah, I mean, emerging markets have known this for a while. They've seen how risky it can be to lend money to governments. Government defaults can really shake things up. And now it seems like the West is starting to catch on.
Yeah, the report actually uses this great analogy to illustrate this. They say, imagine lending money to like a big corporation versus lending it to a government. A corporation, it has assets, it has a business model, it generates revenue.
Right.
But a government,
Right.
what does a government really have backing it up?
It boils down to the promise of future tax revenue, really. And in a world that's becoming, well, let's just say less predictable, that promise might not be as solid as it used to be. It's actually kind of shocking. The report even points out that some of those giant tech companies, Apple, Microsoft, they're seen as less risky than the U.S. government.
Wow, that's a pretty bold statement. And that kind of leads into the next big idea from this research. They're proposing a whole new way to think about the business cycle. Forget the old boom and bust model. This report introduces a framework using two market-driven ratios to get a clearer picture of what's really going on in the economy.
So the first ratio compares stock market returns to oil prices. Basically, it's looking at how efficiently we're using energy to create economic growth, kind of like a seesaw. On one side, you've got the stock market performance. On the other side, the price of oil.
So if, the stock market is doing great, but oil prices are through the roof, that might mean that growth isn't as sustainable as it looks. Is that what they're getting
Yeah,
at?
exactly. Now, the second ratio, it looks at gold prices compared to bond returns. And this gives you a sense of the currency's health. Is it holding its value? Or is inflation eating away at it?
So these two ratios together create, a matrix with four different possible economic states.
Yeah.
Where does the report say we are right now using this new framework?
Well, based on the latest data, it seems like the U.S. is in what they call an inflationary boom. Energy efficiency is okay, but there are signs that the dollar is, losing its punch.
Hmm. Okay. So things might look all right on the surface, but maybe there's trouble brewing underneath. This is where the report gets really interesting. They introduce this idea of a monetary illusion.
It's a fascinating concept. The monetary illusion describes how we can be tricked into thinking we're wealthier than we actually are because of rising wages or asset prices, even when inflation is quietly chipping away at our buying power.
Yeah, like if you get a 5% raise, but everything costs 7% more than it did last year, technically you're making more money, but you're actually worse off.
Right,
Oh,
exactly. And the report illustrates this with the S&P 500. Since 2019, it's gone up, let me see, almost 80% if you're just looking at dollars. But when you measure it in gold, it's down almost 3%.
wow, that's a pretty big difference. It really shows how easy it is to be misled if you're just looking at dollar figures and not taking inflation into account.
Definitely makes you think, are we all kind of, caught up in this monetary illusion, thinking we're doing better than we actually are?
And that's where the argument for gold as this anti-fragile asset really starts to make sense.
Yeah, the report makes a pretty bold claim. It says gold is actually less volatile than bonds.
Wait, really? I thought bonds were supposed to be the stable, low-risk investment.
Yeah, that's the conventional wisdom.
Yeah.
But they back up their claim by comparing something called the MOVE index, which tracks bond market volatility, to gold's implied volatility. Basically, it's a way to measure how much they expect the price to fluctuate.
And what do they find?
Well, their analysis suggests that gold prices tend to be a bit more steady. They don't jump around as much as bond prices do.
Okay, so how do they explain that? It seems kind of counterintuitive.
They argue that it's because gold isn't just, a piece of paper like a bond is. It has intrinsic value. It's been a reliable store of wealth for centuries, especially during uncertain times.
Yeah, it's like that old reliable friend who's always there for you no matter what's happening.
That's a good way to put it.
And then they tie all of this into this massive trend that's been happening on the global stage, de-dollarization.
Right, more and more countries are moving away from the US dollar. They're looking for alternatives because they don't want to be so reliant on a single currency.
And this is where gold comes in.
Absolutely. As countries are diversifying their reserves, a lot of them are turning to gold as a safe, neutral asset. It's been a stable store of value for, well, basically
The
forever.
report actually has some pretty interesting stats about China's gold reserves compared to how many U.S. Treasury bonds they're holding. Let's just say. It definitely looks like things are changing.
Yeah, for sure. It looks like the whole financial landscape is shifting.
So, okay, this is all really fascinating, but what does it mean for us? Like, how can we use this information to make smarter decisions about our own money? The report, thankfully, does have some advice about that.
It does, and that's what we'll get into next. So the report, it doesn't just point out the problems, it actually gives you a roadmap to navigate this whole changing financial world. There's a section called How to Trade It, which breaks down some practical steps that investors can take.
Okay, let's get into it. What are some of the key takeaways, especially for people who, actually want to use this information?
Well, first things first, the report says you got to figure out where we are in the business cycle. Remember those two ratios we talked about? Those are like your compass, helping you understand the current economic environment.
Right, the stock market versus oil prices, and then gold versus bond returns.
Exactly. So, depending on which quadrant of the matrix the economy falls into, they recommend adjusting your investment strategy. It's not, a one-size-fits-all kind of thing.
Got it. So it's all about being flexible, reading the signals the market is sending and adjusting your sales as needed.
Precisely. Now, let's talk about gold.
Okay, yeah. This is the part I was really interested in. The report seems to be making a pretty strong case for gold, right?
It does. It argues that gold should be like a core part of any diversified portfolio, especially these days. Remember, gold is considered an anti-fragile asset, meaning it can potentially benefit from volatility, not just survive it.
So it's like an anchor in a storm, you know, providing stability when everything else is getting tossed around.
That's a good analogy. Okay, shifting gears a bit, let's talk about energy. The report also highlights energy-related stocks.
Right, which makes sense considering energy efficiency is one of the key ratios in that new business cycle model.
Exactly. They suggest keeping a close eye on energy stocks, especially when that ratio of the S&P 500 to oil prices dips below its 7-year moving average. That could be a sign it's a good time to invest in energy.
Okay, so we're overweighting gold, watching energy stocks closely, and then what about bonds? I mean, those have always been seen as the safe haven, but this report seems to be challenging that idea.
It does. In fact, they recommend minimizing exposure to long-term bonds.
Whoa, really? That goes against everything we've been taught about investing.
I know, it might seem counterintuitive, but their logic makes sense. Remember, bonds are essentially loans to governments. So if a government's financial health starts to decline, well, those bonds become riskier.
So it's like those so-called safe havens might actually be hiding some pretty big risks.
Yeah, exactly.
And what about cash? Should we be like hoarding cash during uncertain times?
Well, the report suggests a more nuanced approach to cash. Basically, they advise against holding too much, especially with all this inflation because its purchasing power is constantly going down.
Yeah, no stuffing it under the mattress.
Right. Instead, they recommend looking into short-term, high-quality corporate debt. That way you can preserve your capital and still earn a little something.
Okay, so we're diversifying, leaning towards gold, strategically thinking about energy stocks, minimizing long-term bonds, and being smart about cash. It's a lot to take in, but it's definitely valuable. This report really makes you question everything you thought you knew about investing.
It definitely challenges the traditional way of thinking. It forces you to think critically about your financial strategies in a world that's constantly changing.
It's like we're sailing into uncharted territory.
Correct.
We need a new map to guide us. This has been a real eye-opener. So as we wrap up our discussion of the report, what's the most important takeaway for our listeners? What's like the big question they should be asking themselves?
That's a good question. I think the most important takeaway is this. Are you prepared for the unexpected?
Yeah, because the world is changing faster than ever before.
Exactly. And if you're holding on to outdated investment strategies, well, you might be putting yourself at risk. We need to be adaptable, open to new ideas, and willing to embrace assets that can not only handle uncertainty, but even thrive in it.
This report really emphasizes gold and it's definitely made me rethink my own portfolio.
Yeah.
But it also goes beyond just, specific investment advice, right? It raises some bigger questions about the global financial system.
Absolutely. I mean, their focus on de-dollarization and the whole idea of moving away from traditional safe havens really makes you wonder what's next.
And that's what's so great about these deep dives. They don't just give you information, they spark new questions and new ways of thinking.
It's all about encouraging us to think differently, challenge our assumptions, and be more prepared for whatever the future holds.
It's interesting. The report mostly focused on the U.S. economy, but this
Yeah.
whole idea of gold being an anti-fragile asset, well, that seems like it has implications for, the entire world.
Yeah, definitely. Remember, de-dollarization is happening globally. Countries everywhere are trying to reduce their reliance on the US dollar. That's going to have a huge impact on how they manage their reserves and think about, financial stability.
It's almost like the tectonic plates of the global financial system are shifting, and gold is this solid bedrock, this stable foundation right in the middle of all the chaos.
That's a good way to think about it. Gold, with its long history as this neutral and, well, universally recognized store of value, it's in a unique position to benefit from this shift.
It really makes you wonder, what would a world where gold is like a foundational part of the entire financial system even look like? I mean, would it be more decentralized? Would it lead to, greater financial stability? Or would there be a whole new set of challenges that we can't even imagine yet?
It's a fascinating question to consider, a whole new frontier, right?
Yeah, this report has really opened my eyes to the possibilities.
It's a good reminder that the world is constantly changing. We have to be willing to adapt, change our thinking, change our strategies if we want to stay ahead of the curve.
Absolutely. Well, this deep dive has been incredibly insightful. I'm definitely looking at my own portfolio differently now, trying to figure out how to apply these ideas. What do you think is the biggest takeaway here for our listeners? Like, what's that one question they should be asking themselves?
That's a good question. I think the most important takeaway is this. Are you prepared for the unexpected?
Because the world is changing faster than ever.
Exactly. And if you're holding on to, outdated investment strategies, you could be putting yourself at risk. We have to be adaptable, open to new ideas, and willing to embrace assets that can handle and maybe even benefit from a little bit of uncertainty, right?
This report definitely makes a strong case for gold. It's definitely got me thinking. But, this conversation, it goes beyond just like investing tips, doesn't it? It brings up some pretty big questions about the future of the global financial system as a whole.
Absolutely. I mean, when you really think about de-dollarization and this move away from what we used to think of as safe havens, it really does make you wonder what the future holds.
And that's what I love about these deep dives. They don't just give you information, they make you think. They make you question things.
You got to get those wheels turning.
They really do. Well, we hope this deep dive has been helpful for you all. We always encourage you to do your own research, maybe even check out the source material we talked about today. And as always, stay curious, keep asking questions, and never stop learning. Thanks for joining us on this journey. We'll be back soon with another deep dive into a topic that's sure to challenge your thinking and expand your horizons. Until then, stay informed, stay engaged, and stay ahead of the curve.